What's going on, everybody? Most people buying their first home in BC are leaving somewhere between $10,000 and $20,000 on the table. Not because they're doing anything wrong, because nobody walked them through this system before they got started. There is a set of federal and provincial programs designed specifically to help first-time buyers get into a home for less. But they only work if you know exactly how to stack them properly. This is exactly what we're covering today. By the end of this video, you will know how to use the tripartite savings system the right way, and how to qualify for a tax exemption worth up to $14,000, and how a 3-day window in your contract can protect you from one of the most stressful mistakes buyers make. Stay with me, because the order you do this stuff in actually matters. Let's start with the single most powerful savings tool available to you right now. It is called the First Home Savings Account, or FHSA. What makes it different from anything that existed before is what I call the double tax benefit. Your contributions go in tax deductible, meaning they reduce your taxable income for the year. And when you pull that money out to buy your home, including every dollar of investment growth in the account, the withdrawal is completely tax-free. Think about what that actually means in practice. If you are in a 30% marginal tax bracket and you put $8,000 into your FHSA this year, the government effectively kicks in $2,400 of that through your tax refund. Your real out-of-pocket cost for that $8,000 contribution is $5,600. For a couple, each of you can hold a separate FHSA account. That is up to $80,000 in combined lifetime contributions working tax-free towards your down payment. The annual contribution limit right now is $8,000 per person, with a lifetime ceiling of $40,000 per person. Here is a detail, though, that catches people off guard. If you did not max out your account last year, you are carrying that unused room forward, but only up to a maximum of $8,000 carried in any 1 year. Plan accordingly, because the FHSA is not retroactive the way RRSPs are. Once you open the account, that clock starts. If you have not opened yours yet, the best time to do it was last year. The second best time is today. Now let's talk about your RRSP and a rule changing that went into effect in 2024 that a lot of buyers still have not caught up to: the Home Buyers Plan, or HBP. It lets you pull money directly out of your RRSP and use it as a down payment without paying tax on it at withdrawal. As of April 2024, that limit jumped from $35,000 to $60,000 per person. For a couple, that is $120,000 of RRSP savings you can access tax-free. Here is the part people gloss over and then regret. The HBP is essentially a loan from your future self. You have a grace period before repayments kick in, typically 2 years after the year of withdrawal, and then you have 15 years to pay it back into your RRSP. If you miss a repayment installment, that missed amount gets added to your taxable income for the year. So what started as a tax-free withdrawal becomes a taxable one. Set up automatic repayments. Do not leave that to memory. And here's the part most people do not know. You can use the FHSA and HBP together on the same purchase. Stack them. That is how you build a serious down payment without touching your other investments. Here is where British Columbia gives first-time home buyers something the rest of Canada does not have at the provincial level. It is called the Property Transfer Tax Exemption, or PTT. When you buy a home in BC, the province charges a transfer tax, 1% on the first $200,000 and 2% on the portion above that to $2 million. On an $800,000 home, that bill comes out to roughly $14,000. For a qualified first-time buyer, that entire bill disappears. To qualify, the property needs to be valued at $835,000 or less. You need to be a Canadian citizen or permanent resident. You need to have been a BC resident for at least 12 consecutive months prior to the registration date. And critically, you cannot have owned a principal residence anywhere in the world at any point in your life. It is a clean slate requirement. There is also a partial exemption available on homes priced $835,000 to $860,000. If you are in that range, you still get something back. It just phases out incrementally. Now here's the part that trips people up after closing. To keep that exemption, you must move into the home within 92 days of the registration date. You must live in it as your principal residence for at least 1 year. If something changes and you move out before that year is up, the province can require you to repay a portion of that tax based on how many days remaining in that first year. That occupancy requirement is non-negotiable. Make sure you are actually planning to live there. What about brand new homes? BC has a separate newly built home exemption. New builds qualify for the full PTT exemption on properties up to 1.1 million, with a partial exemption up to 1.15 million. If you are looking at a new build or pre-sale, this is worth knowing. Now let's talk about the stress test and the two ratios you need to know, GDS and TDS. Your gross debt service ratio, or GDS, measures how much of your gross monthly income goes to housing costs alone. That includes your mortgage payment, property taxes, heating costs, and if you are in a strata, your condo fees. For a CMHC insured mortgage, you need to keep this under 39%. Your total debt service ratio, or TDS, takes everything in the GDS calculation and adds all of your other monthly debt obligations on top. Car payments, student loans, minimum payments on every credit product you carry. That one needs to stay under 44%. Here is the part that catches buyers off guard though. Lenders treat unsecured debt differently than you might expect. They calculate your monthly obligation on credit cards and lines of credit as 3% of the outstanding balance, not your actual minimum payment, 3% of the balance. So if you are carrying $20,000 on a credit card right now, the lender is adding $600 a month to your TDS calculation. That $600 every month could take $60,000 to $70,000 off your maximum purchase price. So pay down or pay off revolving credit before you go into a pre-approval process. It will meaningfully increase your budget. And the stress test itself means you have to qualify at either 5.25% or your actual contract rate plus 2%, whichever is higher. So plan around it. The 3-day safety net. This one matters a lot, especially if you are buying in a competitive market where the pressure to go subject free is real. Since January 2023, British Columbia has a law called the Home Buyer's Rescission Period, or HBRP. It gives you 3 business days after an accepted offer to walk away from the deal for any reason. No explanation required. The 3-day window is not free though. If you rescind, you owe a seller a fee equal to 0.25% of the purchase price. On a $500,000 home, that is $1,250. On a $700,000 home, that is $1,750. That amount is deducted generally from your deposit held in trust. The HBRP does not apply to properties sold at auction, court-ordered sales, or foreclosures. And pre-sale contracts have a separate 7-day window under the Real Estate Development Marketing Act. Know what protection you have before you sign anything. Let's talk about budgeting. Here's where a lot of first-time buyers get caught completely off guard. The purchase price is not the only number that requires cash on closing day. In BC, soft costs typically run between 1.5% and 4% of the purchase price. Your legal or notary fees typically run between $1,500 and $2,500. A home inspection runs between $400 and $800 or even higher in larger homes. An independent appraiser, if required by a lender, is another $300 to $500. Title insurance can be $200 to $400. Then there are property tax adjustments, which can add another $500 to $2,000 depending on when in the year you close and depending on the property tax amount for the house. Add it all up on a $500,000 home and you could easily need $7,500 to $15,000 in cash on top of your down payment on closing day. Budget for it early. Do not discover it at the finish line. One thing specific to Prince George, if the home has a wood-burning stove or fireplace, budget an additional $275 to $375 for a wet inspection, WETT. Insurance providers up here in the north regularly refuse to issue policies on homes with wood appliances unless a certified wet inspection is signed off on. Here is why all of this matters even more if you are buying in Prince George though. The average assessed value of the single-family home here in early 2026 is sitting around $459,000. That puts the vast majority of our inventory comfortably below the $835,000 PTT exemption threshold. Most first-time buyers in this market qualify for that full tax exemption automatically just by buying here. Inventory here is balanced right now. If you look at all the property types, we are sitting around 5.7% months of supply for PG city and rural areas covering all property types, which means you have time to put protective subjects in your offers. Keep in mind that detached only is sitting around 3 months supply, which is more of a seller's market. This is not uncommon for Prince George detached supply to sit this low. You do not need to go subject free to be competitive in this market though. Use the inspection, use the financing condition, protect yourself, but come prepared. Navigating the Prince George real estate market does not have to be stressful. I have a free seller's guide if you're planning to list, a relocation guide for anyone moving to Prince George, but if you're looking to buy and want more tailored information, ask for my Homebuyers program. On top of our Homebuyers guide, I'll send you exclusive weekly videos and emails to walk you through the process step by step. Just comment the word guide below, tell me which one fits your situation, and I'll send the link right over. And when you're ready to actually look at homes or list your property, the easiest way to connect is to call, text, or email. All those details are in the description, and we'll see you in the next video. Thanks for watching.